Well, hi, it's Adam here. Welcome back to the Financial Traders Cafe. Now, I've got a question for you. How many times have you tried to pass a proprietary challenge with companies like FTMO and others? Okay, have you failed once, twice, 3 times, 4 times, 5 times? Leave a comment below. Let me know how many times you've tried to pass a challenge. Or perhaps you've passed a challenge, but you've not been able to hold on to a live account long enough, and you've ended up just hitting drawdown, breaching the limits, and not made any money. Well, the cost of this is quite considerable. If the average application for a trading challenge, depending on the size of the account that you go for, can be anything from £450 up to £900. And if you fail several times, that's getting quite costly and also frustrating, and the lost income opportunity. Because if you do pass a challenge and you do get a live trading account and you do start hitting the targets and you're making 8,000 a month, 80% of that is quite considerable. So that's what you're missing out on by just continuously failing those challenges. And what I want to do is just show you how to pass the challenge. Okay, it may not be the strategy you're using. I've got lots of different trading strategies. It may not be that. Maybe you have got a great strategy that you're using and you've got it really dialed in, it's working well, and then just suddenly something goes wrong, or you lose your head a bit, do silly trades that you shouldn't be doing, no consistency, and one thing leads to another, and then you fail another challenge. You don't want to keep doing that. You want to find the right way. And what I'm going to do, as I said in this video, is show you how to pass the challenge by changing certain metrics, by tweaking things, but also give you control of the trades that you're making, so you know when you would be taking profit, where to put the stop loss to make sure that everything fits, so that your risk reward ratio is what it should be to hit the monthly return that you need to achieve. And here's the Trader's Edge formula. RPT, that's risk per trade, times TPM, trades per month, times RR, risk reward, times win rate, WR. That gives you your monthly return. And the calculators that I created, this does the work for you. All right, so let's get into this. So we're going to go to the trading risk management calculator here. What we're going to do is we're going to put in, say, 374,000 is probably a little bit too high. So let's get to 70,000. So let's just say you're applying for a challenge with a company like FTMO for 70,000. You know that you need to hit 10%. It used to be you had to hit 10% in 30 days, but now it's open-ended. Okay, so as long as you hit your 10%, then you pass the challenge, as long as you don't breach the 10% drawdown or lose more than 5% of the account in one day. Okay, so let's assume you're day trading. You could be trading Forex, you could be trading the FTSE 100, you could be trading the DAX, you could be trading anything. But let's just say you're trading the German DAX. All right. And on average, you're making 3 trades per day, and you're going to trade for 20 days in the month. All right. Now, a lot of traders, what they do is they put on different trade sizes on each trade that they make. So sometimes they might put £8 a point on, or £10 a point. So you may decide that if you're trading at 70,000, that you're going to risk 1%. So is that too high? Is that too low? But what we're looking for here is a sweet spot. Please leave comments below this video and let me know what you risk per trade. I'll be interested to know. In this case, we're going to look at what happens if you risk 1%. Okay, 1%, and your average risk reward on trades is 1.4. All right. Well, if that were the case, you would need a win rate of 48.6%. Okay, so immediately it calculates what your win rate needs to be. So in your trading plan, you need to have 29 winning trades from the 60 that you're taking on. So that's less than the 50%, less than 50%. And what this means is that if you had 31 losing trades of 700, but you had 29 winning trades of £980, take one from the other, okay, and you've hit your target of 7,000. Can you see there? 10% we've put in, that's what you need to make. You've had 29 winning trades, less than 50%, and you've hit your target. This also breaks it down, 7,000 for the month. That means you've got to make 1,750 for the week, 350. So when you're looking for, when your trades are actually setting up for you, you can go for those, but you're not rushing into ones that you shouldn't do. Trades are like buses. They just come along all the time. They might be late sometimes, but there's always another bus coming along. Same as trains, always one coming along. There might be a long delay for them. But yeah, same with financial markets. If you miss a trade that's setting up nicely for you, forget about it. Just move to the next one. Anyway, what you're not doing is you're not rushing into taking trades that you shouldn't be taking. All right. So that's on a risk of 1% of your account on each trade. Let's just say at the moment your risk reward is 1.4. You could just tweak that ever so slightly. So let's say 1.6. So you just slightly increase the reward that you're getting on each trade. So in this case, you're now getting a reward of 1,120 if you're risking £700 per trade, but you only now need 27 out of 60 winning trades. 27 out of 60. Okay. What about if we increase the risk reward ratio to, let's call it, you're getting 2 to 1. All right. Well, look at your win rate. It only needs to be 38.9%, so 23 winning trades out of 60. So you get 37 losses. Can you imagine? You get a bit of a losing streak. Oh, God, the strategy is wrong. I need to change this. I'll change the time frame. I'll change this. I'll change that. And you just start second guessing. You start questioning whether the strategy is right for you. It might be a great strategy that you're using, yeah, and you've back tested it and it works, but you suddenly get a bit of a losing streak. Well, you're not going to be that concerned, okay? You're not going to be that concerned because you know that as long as you get 23 winning trades from the 60 that you're taking, you will hit this 10% target. Now, that's working on a 2 to 1. So if you are looking at a trade setting up, so again, we're just like work on the DAX. So let's, what is it today? It's Friday the 6th today. So we're going to trade the DAX and we're going to go for a short here. So let's just say you're going to be selling at 24,234. All right. And your stop loss is going to be 26 pips. So 26 pips, 24,26. And then you'll take profit. Okay. So this is the important thing. This is the important thing. So when you're looking where you're going to take profit, a lot of traders enter the trade and you think, oh, I think I'll just take it. I'll take it when it gets to making me, 600 quid or something like that, and then it'll evaporate. They have just no actual target when they trade. So what you want to do is if you're selling, you've got to look where, in this case, perhaps where that previous swing low was, where there might be some support for the price, where it might start to rebound from there. So you don't want to see the profit you're making start to evaporate faster than a nice holiday on a hot summer's day. Really, you've got to understand where that stop loss is. So let's just say you're eyeing this trade up and you're thinking, right, okay, 24,210. Okay, in that case, well, if you're entering at 24,234 to make 24 pips and you're risking 26 pips, no, I don't really fancy that. Why would you do that trade? But let's have a look. Say if you can see that the price could actually drop to 23,187. Okay. So, that looks slightly better, but, do you want to go into that trade? So let's just go down a bit further. Take 23,172. In fact, I've just seen what I've done. I don't know whether you've seen that. I've put in a 23 there. I was just thinking, why has that actually happened there? Okay, so I put in 23,172. That would have given you over 1,000 points. I thought the risk reward was too good to be true there. So entry price 24,234. You can see that the target is 24,172. So in that case, your reward would be 2.38. Fantastic. Let's just say you think, do you know what? I only need like 2 to 1. Okay, I only need 2 to 1 on the trade. So what are you going to do then? You look at this and you say, right, okay, well actually I could take profit at 24,182 and that would still give me a 2 to 1 return. So I'd hit my IRR target of 2 to 1. And then what you do is you move your stop loss down to 24,182 if it hits there. And then once that happens, you can leave the trade open. And if it goes on to, make you even more money, let's just say it goes on to make you, 2.73 to 1. So you're getting 24,163. It drops to there. Okay, you could maybe take the profit at that point. But what you do know is that worst case scenario, you're going to hit your target at 24,182. See how much you're in control when you do this? Okay, now here I've got 24 trades, win rate 70.8. So you don't even need to get 70.8. That's the average risk reward. And then what we do is we add this to the journal on the right hand side, and there we go. Okay, so if we go back to this, let's have a look at a couple more numbers here. So let's just go back to, we only want to risk 0.5% per trade, okay? And that might fit in with your drawdown plans, okay? Because with these trading challenges, if you've got 10 in a row wrong, 1% of your trading account, then that's your 10% blown. So you might think, okay, we'll have 0.5% risk. We're keeping the risk reward ratio of 2, but only 0.5% risk per trade. So that means you're risking £350 per trade. But for each winning trade, you're going to get 700 back as a minimum. As I said before, you can move the stop loss up, bank the 700, and then leave the trade to keep running. And who knows, you might end up getting an even bigger reward, which would improve your risk reward, your average risk reward overall. Look at this. In this case, you only need 44.4% win rate. That's 27 out of 60 winning trades. Okay, so you could have 33 losing trades of 350. So you're not going to suddenly, have a heart attack when you get, 3 or 4 trades in a row of £350 wrong. You're thinking, well, that's just part of this. I'm allowed 33 losing trades here. The next 3 or 4 might all be winners at £700. So I'm back in the game again, but you're not going to be getting to a silly drawdown situation. All right. In fact, I'm just going to show you here. I have just written a guide on the Trader's Guide to Understanding Drawdown, Protecting Your Capital. So if you want that, then I go into drawdown, what you need to get back, all the concerns that we have with drawdown, how it can really affect you. It covers everything in that guide. Anyway, so let's just go back to this 70,000 account. So we're just changing some of the metrics on the left here, so you can see how you can pass a challenge. You can get to the 10%, okay, quite comfortably, okay, and you don't now have to do it in just that month. It might take you 5 weeks, or it might take you 6 weeks, okay, but we're working on the basis here that you should be able to hit that target in 1 month. So no more failed challenges. You're going to get the account, okay, if you've got the right trading strategy. Of course, I've got lots of trading strategies that I use for day trading, stock trading, and so on. But you might have your own one. If you need any help with this, you can always book a strategy call with me by just clicking on here. Well, in fact, if you haven't got access to the calculators, you only can do that when you've got the calculators to book a strategy call. But I will have put a link in the description below if you do need some help. But let's just get back to this. So let's just do one final change on here. Let's just say you only want to risk 0.3% rather than 0.5. So we've gone all the way down from 1% risk down to 0.5, now down to 0.3% risk. So you're now risking £210 per trade. Okay. Your reward, £420. So you now need 31 out of 60. So slightly above 50% now is what you need to achieve. And we're looking at that risk reward ratio still of 2. What about if you are only getting 1.8? What does that do? Well, you'd need to get a slightly higher win rate of 55.6, but it's not going to be the end of the world. You can still actually do that. So what about let's say 1.7? Okay, you would need a 57.6% win rate. But what if you increase the risk per trade back to 0.5? Well, now you only need a 49.4% win rate. What about if you decided you're only going to do 2 trades per day over 20? trading days per month. Well, now you're doing less trades, so you now need 22 out of 40 winning trades because you're risking 0.5%, and your risk reward ratio is 1.7. What if you increase that to 2? Well, you now need 20 out of 40 winning trades. So this can be altered. All these metrics can be altered and styled to your type of trading. So you look at the start of the month, how many days do you want to trade for? And it's going to be different for everybody. You know, I've got guys that I coach that are day traders, swing traders. I do all of it. I love all of that because it's just something that I've done for such a long time as financial advisor for years. So I'm used to, I was managing 30, I think it was about 35 million under management at one point, but we were going into investment funds, not into shares. But now I absolutely love trading individual shares, so Nvidia, Tesla, and we can day trade those. We can swing trade, so it's not just your forex and your indices that you can trade. So it's whatever is right for you, and I help people with that to find what type of trading is right for them, and working on the basis of, you know, this is all tailored to how many days that they want to trade per month and how many trades they want to do per day. Okay, and all these numbers change, so it's all tailored to exactly what you're trying to achieve. Most of all, the psychological impact of this is huge because it really helps you to be in control. You're not going to lose your head. You're not going to throw your computer or your laptop out the window because, you know, you're having a bad day. You're in complete control of this. And, you know, it just helps massively. We've got this drawdown calculator as well. So we go through that to calculate what would happen if you risk too much on your trading account, how you could get into a drawdown situation too quickly. And then also the trading strategy analyzer. And this one does actually look at what the win rate sensitivity would be, performance, risk analysis, and also the maximum drawdown, okay, in your Sharpe ratio. So I'm going to get into that in this video, but I created these calculators because I just love them, absolutely love them, and this is the difference that makes a difference. So if you want some assurance that you're going to be able to pass the next trading challenge that you take, this is your toolkit. This is how to do it. And for the cost of these calculators, they are absolutely nothing compared to the thousands and pounds that people lose on their personal trading accounts, and the cost of the amount of challenges that people fail, and the lost opportunity, of course, because, you know, the longer it takes, imagine if it's taken you 6 months or 12 months, failed challenges, the opportunity of having a live account, how much money you've lost there. All right. So this is your toolkit. This is the secret weapon I use. And, you know, I just absolutely love it. Anyway, so that's the end of this video. This is how to pass the FTMO trading challenge or any other proprietary firm challenge that you take. This is how to do it. You change the numbers to fit exactly what it is that you're trying to achieve, which should be to pass and get 10%, which is what the pass rate needs to be with most of the challenges out there. All right. So if you like this video, please leave a comment below. Let me know what your win rates are, what your risk reward ratio is on average, what strategy you're using. I'm interested to know that. If you want to have a chat, then you can do by clicking a link below. And if you like this video, then please like it. And if you have not subscribed to the channel, then please subscribe and hit the bell so that you're notified of the next video that I will be releasing. I hope you found this useful. You should do, because it will make the difference for you. But if you don't, then tell me. And I will speak to you again in the next video. All right. Happy trading. Speak soon.